And welcome. It's Mary Ellen McGonagle with your weekly MEM Edge show. And this is the show where we bring you where the action is in the broader markets. Let's get started. As always, this is all about helping prepare you not only for next week, but beyond as well. So we're going to take a look at the broader markets, see where did we close the week, what took place behind the scenes, beneath the market's surface, and then some of those headline news that really drove price action. It was a very busy week, one of the busiest certainly of the summer. So we'll get into all of that. And then what is driving price action? Certainly two main factors that were really pushing stocks around a bit last week, but net. So let's take a look at some of that headline news from last week. First up, we did get Q2 GDP number that came out on Thursday, and it did come out at a 2.4% year-over-year increase. And this was quite a bit higher than that 2% level that was anticipated. In turn, we did see a pretty swift response with interest rates going higher. In turn, stocks lowered. We did see a pullback. Actually, in hindsight, it was a nice welcome relief on that pullback in the markets. And we'll get into all of that as we move forward, because there was other news that came out today that helped really put the GDP number in the rearview mirror. We also did see the Federal Reserve come out with their hike rate of 0.25%. As anticipated, kind of a yawner there, but the Federal Reserve did discuss their indecisiveness about future hikes, and that was a little unnerving. It really means that investors will continue to need to remain on alert for inflation, economic, and other data going forward, which has been the case certainly for the last 18 months. We also did see in that FOMC meeting notes the Federal Reserve economists, not so much the governors and the officials, but their economists, no longer see a U.S. recession. And that's pretty big news relative to the economy, and certainly goes against what some of the major Wall Street economists are anticipating. We did see consumer confidence come out. It climbed to a 2-year high, and this was also with that GDP, another number that indicates that the economy is still in a growth mode, which in turn has investors worried that the Fed will in fact do another rate hike. So today we did get core PCE data, and they did come out with a number, PCE, that shows that inflation is in fact cooling, and that was reversing of that GDP number in the sense that a cooler economic, the PCE data is the most closely watched gauge by the Federal Reserve to see where inflation is. And the fact that it did show a continued slowdown in inflation was viewed as quite positive news. Now, next week, we do have earnings season still very much in full swing. So that, of course, will be taken into account, as well as employment data for the month of July. We'll get weekly data on Friday. So that's going to be very, very closely watched as well. So from here, let's go ahead and take a look at those markets and see where did we close for the week. And here we are, a daily price chart of the S&P 500. And the uptrend in this index does remain very firmly in place. So we can see Thursday's pullback. We did have a recovery, and at this time it seems to be more of a blip than anything, as your momentum indicators, your RSI and your stochastics, very firmly above net neutral and trending upwards. So good news, certainly, with the broader markets. From here, let's go ahead and take a quick look at the Nasdaq, and you can see that this index as well pulled back. It did find support at this upward trending 21-day moving average. Good news is on today's almost 2% rally on that weak inflation data, we can see that the index is back above that 10-day simple moving average. Momentum and stochastics and RSI both in positive territory. So the Nasdaq is back in an uptrend as well. So from here, we're going to take a look at those 11 underlying sectors in the S&P 500. This is a 2-month daily price chart view, and I've added that RSI. Let's take a look at some of these stronger areas up here. Now, this is not going to be sorted relative to performance last week. Rather, it's relative performance over a longer time period. So let's dig in. First up here is XLC Communication Services, top performer, up 5% last week. And this is all about their 2 heaviest weighted stocks in this sector. We're up over 10%, and that will be Alphabet and Meta Platforms. And we'll get into that as we review those mega cap names moving forward. But certainly of note, you can see a new uptrend emerging here with this MACD poised to trend upward with XLC. And then as we move through these various other sectors, a couple of other areas of note, we did see basic material stocks continue in an uptrend. This was the second best performing sector, up 1.8% for the week. Rather mixed. Certainly some chemical names, aluminum and so forth, but of note, an uptrend very much in place. From here, we can take a look at energy. And this particular sector has been in a nice uptrend here of late. We are beginning to see a number of these companies report earnings next week. More earnings due, of course, in this group. And I'll also, as we move forward, share with you other factors impacting the price and the energy sector. Another area, of course, you do want to be aware of names or areas that are weakening a bit. And we can see that XLRE, this is the real estate sector, mostly populated by REIT stocks, and it is beginning to, certainly at the very least, pull back. We have a negative RSI, very high volume on this deterioration. Another number of factors. First up, higher interest rates are not good for REIT stocks. That would explain Thursday's pullback as these companies expand and they do need to borrow capital in order to do so. But the more recent decline, a bit today, is due to earnings. A number of these larger names are coming in with numbers that are below estimates. So bearing that in mind, that we are beginning to see what may be, at the very least, a pullback in that real estate area. Another area that we want to certainly be on top of is growth names in the consumer discretionary area. A little bit of wobbliness here. The group was up 1% for the week. It did retain its bullish stature here with that RSI in positive territory, likewise with that MACD. And of course, the heavier weight names in this area are going to be Tesla and Amazon, and both of the names did outperform. We did see outperformance continuing in leisure stocks, travel related and elsewhere, which is continuing to buoy this particular group. So from here, let's go ahead and take a look beyond these sectors. We want to be aware beneath the surface even further. And I do have a number of ETFs that I find super useful in staying on top of potential rotation here. Again, by order of strength, I'm going to go ahead and update this view. And we can see first up here is KRE. This is that regional banking ETF, continuing to firm up. This is all about banks not necessarily showing positive earnings all of the time, but they are coming in above estimates. We also did get news early last week that PacWest is very close to merging with another large bank on the West Coast. That is super good news. And overall, we are seeing progression. The group was up 5% for the week. As we move through, taking a look at some of these other underlying areas, I talked about energy stocks on the move. We did see the price of Brent crude oil tick up a bit last week. We're at about 83.5. So we are in the throes of potentially reversing this downtrend. A lot going on by way of reduced oil supply and surprisingly strong demand. So the combination, of course, is helping boost this price of oil, which in turn is boosting the outlook for some of these energy names. As we move through, you also, from my work, this is an area that I focus on within technology, are these semiconductor stocks. This is the ETF, up 4.5% for the week. We did see a pretty pronounced pullback last week, recovery from that this week, and net, your momentum did remain in positive territory. This is also very highly impacted by earnings. So I'll share with you a couple of names that did help with their positive and bullish outlook, help the semiconductor industry group retain and regain its nice uptrend. Moving along, I did mention consumer discretionary. Let's take a quick peek here at XRT. This is the retail ETF, and you can see that it is sitting up firmly above this 10-day moving average. And as elsewhere, we are seeing generally good earnings coming through in these retailers, which is helping to keep that area constructive. And as we move through, here's a look at the yield on that 10-year Treasury. This is Thursday's pop on that strong GDP number, which did push the 10-year yield above that 4% level. And this is very closely a hot button number for these yields on the 10-year, but we did pull back a bit today. So we are just below that 4% level, which is good news, certainly for growth stocks. Another area to keep in mind is the software, simply because it's had such an extensive run coming out of this pivot here and uptrend that did take traction in mid-May to the middle part of this month. More recently, we are seeing a little bit of a pullback, nothing alarming. The volume is light, and IGV, the software ETF, remains above that 50 in positive territory. So from here, I just want to make sure I'm not missing anything. We are good. I do want to move on and share with you some of these bigger mega cap names that not only drove earnings in their particular stock, but also there were implications beyond. So first up, we can take a quick look here at Alphabet. They came out with their numbers earlier this week, and we did experience a nice gap up into a base breakout. I'll go ahead and mark this up. This is a base pattern that I talk about a lot because it is one of the most powerful when you get a number of characteristics taking shape at the same time. First up is that gap up. The gap up in turn does provide a nice base breakout, but it does occur on heavy volume and in response to strong earnings. That's a triple play there. So we can see that since that, Alphabet has been advancing, RSI trending upward and in above 50. And of note from my work is the fact that this MACD is just crossing black line up through the red, indicating potential further upside. When you are viewing, and I'll share with you another mega cap name, it can be really helpful to go back historically. Each stock, many of these stocks, I view them as having their own personality, and we need only go back to this mid-May gap up here in Alphabet and use that as precedence for what may potentially evolve with the stock now. Next up, let's take a look at Meta. I did mention this was the other communication services name that came out with good numbers, and they also guided higher. So in response, we got a very similar gap up. Now, it did experience a base breakout, pulled back in line with Thursday's pullback in the markets, but recovered that and then some today with a 4.5% rally. So let's go ahead back and take a look at precedents here with Meta, because we've had this gap up into a base breakout during their last 2 quarters. And I would look at this most recent May quarter as precedent. And this is one of many ways, or actually several ways, that a stock can respond after experiencing a healthy gap up. Oftentimes, you will see a pullback to its upward trending 10-day simple moving average, but also bear in mind that May was not the most constructive backdrop for the broader markets. We are in a more bullish phase at this point in time. We also are experiencing heavy volumes similar to this gap up period here, but net very constructive price action in Meta platforms. Many times individuals will very likely be put off by a 10.5% gain on a week, but you want to be able to zoom out, take a look at that bigger picture, and have a sense of what may occur beyond that particular big move. Now, what did shape up in the earnings releases were the fact that both companies are very much involved in AI. Meta, in particular, is planning on putting quite a bit of capital toward AI. And with that, we did see that nice move into these semiconductor companies that are very involved in providing chips or equipment to maintain or build equipment for AI. And NVIDIA, of course, would be a standout. They are the leading chip provider for AI. And you can see the stock remains in a nice uptrend with positive momentum. From here, let's go ahead and take a look at other names outside of energy and those mega caps that came out with earnings. And it's always important to be aware of what's taking shape outside of that secular area, and this is Procter and Gamble, PG, and they did come out with earnings, and we can see that it had a nice move today in response, up almost 3%, pushing the stock into a nice base breakout. The interesting news is that they did not provide super constructive guidance. They still do see inflation as an issue, but investors were able to look aside from that, and we did see nice volume on that base breakout. Another mega cap name, not tech, that did also experience strong earnings, gapped up into a base breakout, is Boeing. BA, of course, is the ticker symbol. I'm going to go ahead and add a 5-day simple moving average, and oftentimes that will then become your new area of support. Pullbacks to that area can be a buy point. Another name that reported earnings last week in that Staples area, but it was not constructive, is Kimberly Clark, KMB. This is a company that is, of course, paper-driven diapers and other products similar to that. And note going into their earnings that the company already was in a deteriorating, downtrending type of phase. Here's the response to their earnings and a continued downtrend. When these companies come out with numbers and not every positive report is being rewarded, you will want to keep an eye on the response and also on that volume. We did see selling on above average volume, which pushed these metrics relative to their momentum into negative territory, foretelling further downside. So from here, I'm going to move and share with you names that are currently exhibiting, and this is another base formation I've talked about in the past, and that is a cup with handle base breakout. This is Block. SQ is the ticker symbol. They were formerly known as Square. They are a payment processing firm. And when you are looking for a potential cup with handle base breakout, you are going to be looking for a name that has hit a high, certainly within the last several months, pulls back, and then begins to approach that prior high. You're not looking for it to get exactly up to that level, but certainly at least 2/3. And then the stock pauses and forms what is called a handle formation, which is what we are seeing now. At this point in time, you will want to be on the lookout for a breakout above the high point of that handle, which is at about $81. Another name that is also exhibiting a cup with handle based breakout is a company that was added to the S&P 500 600 this week. It is a smaller cap name that also has that same pattern, ticker symbol VICR. This particular company is all about AI They help power systems and components that are AI related, but certainly not your standard looking chart simply because of this really big gap up. But we can see actually this is not a cup with handle. This is more along that base breakout on that gap up on very, very heavy volume. More to the point with this particular name too, actually, is the fact that when these smaller cap companies get going, of course, your gains can really be outsized, but also the fact that the really big move was all about their ability to help power these new AI-related platforms. So with that, I'm going to share with you that semiconductor name that is AI related, came out with numbers last week and really helped the overall semiconductor industry group. This is Lam Research, LRCX, and the stock really had been a bit of an underperformer. This is part of my MEM Edge report. I had added the stock back here and was getting a bit frustrated because the name really was not performing in line with other semiconductor stocks. However, the overall name did remain above this 50-day simple moving average. We stayed with it, but more to the point, let's take a look at the stock's base breakout here yesterday. This was on a very tough day for the broader markets. Nice high volume, upside momentum here, and a nice shift with this MACD telling us that this period of consolidation has now entered into an uptrend. And of course, again, their comments were very widely viewed as constructive for semiconductor stocks. Also on the earnings front, an area that I'm on the lookout for are names that are reversing their long uptrends, downtrends. And oftentimes when looking at stocks, I'm very focused on these faster moving growth names that are close to or approaching new highs, but it can be really equally powerful to capture names that are reporting strong earnings and are in the throes of potentially reversing their downtrend. This is International Paper. The company came out with numbers that were 28% above estimates. And this company, again, oftentimes with these more cyclical names, as they are down and out, you will see that their yields will increase. The company does have a 5.2% yield. Another name that many of you may not have looked at here recently because it has been so down and out, 3M. You can see this gap up in response to earnings, 25% above estimates. Another 5.5% yielder, and you can see the positive momentum shift here, certainly with that MACD entering into positive territory. Another company that is in the medical products space, DHR, Danaher, a little bit sloppier, but net, it has broken back above this 200-day simple moving average, and your shorter term moving averages are now in an uptrend. Last up, we'll take a look at a name that is not necessarily down and out, but it did enter back into an uptrend. This is IoT Samsara, and it is an AI-related stock. Pointing this out for a couple of reasons. First up, we did see the stock pull back. AI is a topic among stocks that really ebbs and flows on a daily basis. And you can see this particular stock pulled back, but it did find support at that 50-day simple moving average, quite constructive. Today's 6+% rally pushed the stock back above that 10-day simple moving average. It also pushed that RSI back into positive territory. Now, that is good enough to indicate that the stock could easily trend higher from here. But last up, if we could see that MACD black line up through the red, that would really pin this stock as poised to continue its new uptrend. Now, I did want to also share with you housing and housing-related stocks. There was news out last week relative to the housing market that is indicating that demand remains quite strong. I'm sharing with you another name from my MEM Edge report, suggested holdings list. This is Meritage Homes. MTH had been in, we did add the stock upon this downtrend reversal into an uptrend. The company did come out with numbers after the close yesterday that in turn pushed the stock back above the shorter term simple moving average. Take a look at this high volume, and your outside momentum remains quite constructive. The stock did come in with numbers that were 42% above estimates. They posted record second quarter home closings or home sales. So quite positive. From here, we can pivot and take a look at some building supply stocks because, of course, these homes do need supplies to be built. If there's strength in these new home builders, you will see. Now, this is certainly not a name new, but it is Boise Cascade, wood products company in a very confirmed uptrend. They do report their earnings on Monday. So the names that I'm sharing with you here are due to report next week. Builder, BLDR, another name, had a gap up. Their last quarterly report, nice uptrend. You want to see a name such as this pull back going into their numbers. They are due to report on Wednesday. They provide structural materials for these new homes. BLD is TopBuild. They are due to report Wednesday, all about insulation for these new homes. And we can see that it too has pulled back. So it will be very interesting to see how these home building product suppliers will fare next week. Trex TREX due out on Monday, all about decking and fences. So really, it's about that add-on play that can be very, very powerful in addition to those individual stocks. I'm going to leave it there for this week. Everyone, have a great weekend. If you haven't already, use that link below to trial my MEM Edge twice weekly report. Take care. I'll see you next week.